So we're going to have, in my view, the war is going to end someday. And when it does, we'll have a big rally in the markets because people are not so worried about central banks anymore. The central banks are scared. Have a big rally, and that's the last rally. And then we have a bear market, and we have the worst bear market in my lifetime, and which means we also have a bad economy. The debt, I mean, Adam, this may sound dramatic, but we had a bad market in 2008, 2009, bad economy. Since then, and that was because of too much debt. Adam, since then, the debt has skyrocketed.
For a while now, American investor and financial commentator Jim Rogers has been warning us about the increasing risk of a bear market and recession. And it is not going to be any ordinary recession or bear market. The 79-year-old believes it will be the worst he has witnessed in his lifetime. In 2021, Rogers predicted that the recession would hit many economies very badly. That was before Russia, a major producer and exporter of many major commodities, invaded Ukraine, throwing even more uncertainties and imbalance into the mix. Now, Rogers is certain that the economic downturn will be worse than he previously predicted. In a recent interview, Rogers explains that he still sees a severe recession sometimes in the near future. Before that happens, the guest professor of finance at Columbia Business School states that two other things have to come first. First, he says the war in Russia has to end, which would then be followed by a big rally as investors pump money back into the markets. Rogers adds that the rally will not last because of the existing problems, unchecked money printing, and skyrocketing debts. Since nothing is being done to check these existing problems, Rogers believes the global economy will naturally slip into a terrible recession. Before we get to Rogers' part of the interview, remember to give this video a thumbs up and subscribe to the channel. We appreciate your continued support. Let's dive right in.
What is your current assessment of the global economy and financial markets right now?
Well, there are two different things, the economies and the financial markets, but most economies are and continue to be reasonably strong because there was so much money printed and so much money borrowed and spent. And, you know, Adam, if you give me $1 trillion, I'll show you a very good time. And we're all having a very good time. I don't know how much longer it can last. It is leading to inflation, which is leading to higher interest rates. And then, of course, there's war as well. War has never been good for anybody except a few generals. But the rest of us suffer. So we're going to have, in my view, the war is going to end someday. And when it does, we'll have a big rally in the markets because people are not so worried about central banks anymore. The central banks are scared. Have a big rally, and that's the last rally. And then we have a bear market, and we have the worst bear market in my lifetime, and which means we also have a bad economy. The debt, I mean, Adam, this may sound dramatic, but we had a bad market in 2008, 2009, bad economy. Since then, and that was because of too much debt. Adam, since then, the debt has skyrocketed. Can't even count how much the debt is up since then. So the next bear market has to be the worst in my lifetime. I'm not trying to scare you. I'm just telling you facts.
Last week, there were reports that Saudi Arabia was in talks with China to accept the Chinese yuan instead of the dollar for oil sales. The news story was so big because such a move could signify the end of an era for the United States and the dollar. Rogers explains that the sanctions against Russia have shown countries just how much power the United States has over them through the USD. So, if countries like Saudi, Russia, China, India, and other economic giants ditch the US dollar, what happens to the already troubled US economy? Listen to Rogers explaining his view on the issue.
Buy drugs, buy your girlfriend a coat. You do whatever you want to with an international medium of exchange. But now, if Washington gets angry at you, they put sanctions on you and you cannot use it. So needless to say, lots of countries are saying, wait a minute, we got to find something else. Because if America ever gets angry, we're in real trouble. So China, Russia, India, Brazil, Iran, many countries are now looking frantically, have been, but now it's accelerated, looking for something to compete with the US dollar. I don't like saying it, Adam, I'm an American, but I have to face facts. And what Washington is doing is ending the 100 years or so, or 80 years or so, that the US dollar has been the world's reserve currency. Not good for you, not good for me, certainly not good for our
Being a crypto channel, we are always most interested in discussions about cryptocurrencies and other digital assets. Though Rogers has previously said he finds the massive growth of the crypto market phenomenal, he is not completely sold on the possibility of digital currencies. He explains that making money computer-based or digital will only make it easier for politicians and governments to manipulate things. So, he prefers them to remain trading vehicles.
My deeper concern is, and I know a lot of people who've made a lot of money trading crypto. Many computer currencies have disappeared already and gone to zero, as I'm sure you know. But everybody's working on it, including the US. All money is going to be on the computer eventually. It already is in China. In China, you cannot take a taxi with money, Chinese money. You cannot buy an ice cream with money in China. You have to have it on the computer. They're ahead of us, but everybody's going to be there. But when the US says, okay, Adam, this is money now, but if you want to use that money over there, you can use that money over there. That's not the way bureaucrats and politicians think. They want control. They want monopoly. I don't like it, but they love it. So that's why I have not, as long as the cryptocurrencies are just trading vehicles, who cares? But if they become successful as money, as the bulls say, then I'm skeptical.
Jim Rogers is not the only financial expert that sees troubled times ahead. Many other top experts and institutions have talked about the possibility of hyperinflation, stagflation, and a recession. Currently, the market is still riding the wave of the recent interest rate hike. Bitcoin is up by 11% over the past month at $41,200 per coin. Ethereum has had a 13.45% increase over the past month and is currently less than $100 shy of the 3K mark. Do you believe there is going to be a recession, and how badly do you think it would impact the crypto market? Let us know your thoughts in the comment section below. Thanks for watching.